Housing market in much worse shape than Fed wants to admit, says this expert economist. Guys, we've been talking about this for a while now. The Feds are trying to raise, the interest rates to combat inflation, and it is killing the housing market. Look at this. Here is a quote. The housing market is in much worse shape than the Fed is willing to admit, but policymakers have made it clear that inflation is the primary objective and the housing is a collateral damage. Why? Because at the end of the day, borrowing money where the rubber meets the road is when, retail buyers are buying mortgages, right? Like where you and me go to the bank and get a mortgage. Basically, that money comes from the Feds. So the banks are borrowing money from the Feds and selling it back to us for a higher interest. Now, you might get pissed off and be like, oh man, why are they charging me, if they're getting a lower rate? Well, that is basically the banks are a middleman, but the banks are assuming all the risk, right? They're making sure that they're lending that money to someone that's going to pay back that mortgage, and the government kind of stays out of it in that respect. So that's why the banks, that's why when the Feds had the rates at zero, our mortgages were like 2.3%. Well, that 2.3% is basically the bank is what they make, right? So when the Feds raised the rates to 3%, the banks are now making their margin. So by the time it comes back to us, we might be in that 6% territory. Now the banks could always fluctuate those rates. They could say, hey, we're going to make a little bit less money. And that's kind of what happened. The Feds raised the rates, the banks raised the rates, but then all applications stopped, and then the banks were like, whoa, okay, let's lower the interest rate, so we're gonna make a little bit less money, but we gotta get these mortgages moving, right? Problem is that nobody wants to buy right now. Who wants to buy when the prices are so high and there's a looming recession, coming, right? So people are scared, people are not into it right now, and it's basically freezing the housing market. Another thing is that, it's not that we don't want to buy houses. Look, I get that, yes, they're very, very expensive, but it's not like we don't want to jump in. The problem is that everything is so expensive and we're being priced out, okay? People still want to buy a house. We all want it. It's just we can't afford it at the current prices. And that's a huge problem. And for sellers, the problem is selling your house right now sort of sounds like a bad idea, only because if inflation continues to be a problem, well, properties are a great hedge against inflation. People like to put their money into properties because the value is gonna retain, versus if you keep your money in cash, you're gonna lose value because the cash basically becomes less valuable during inflation times. So, high inflation times. So right now we have this crazy thing where some sellers are like, hey, the market is super hot, let me get my house out there. And that's happening. There's other, people are saying, no way, there's no way I'm gonna get rid of my property if I don't have to. Unless, like I said, if they don't have to. If the economy starts seeing cracks and we start seeing layoffs and businesses going under, obviously that's going to increase the housing supply. Now here, let's keep reading. Check this out. Here is another quote. The sharp drop in new home sales is another clear indicator that the housing is in a recession. Check that out. The combination of higher prices and increased interest rates are generating a notable slowing of the housing market. So again, everyone is calling it a recession. Remember, housing usually leads the economy. So we'll see, if the housing enters a recession, then we can definitely see that the rest of the economy will follow. Remember, housing as a whole, guys, it has a lot of jobs. Like buying a house, right? You don't think about it, but buying a house, it stimulates the economy in so many ways. First, at the simplest level, the banks are basically making more money, right, through the interest rates. At least, with that down payment, and the first few mortgage payments. Then you have the realtor, both the realtors, they make what, 3% each, right? Or 2 to 3% each. That stimulates the economy. Then you have, when you go into a house, right? Guess what? You're probably not gonna like the color of the walls. So now you're either painting it yourself, going to Home Depot, stimulating the economy, or hiring painters, which again keeps the people employed. And that goes across every part of the house. So buying a house as a whole stimulates the economy just beyond the sale of that house, right? And then to the sellers, where the sellers have to go somewhere, and they're gonna, again, move to that new location and stimulate the economy in all those other ways, in the same ways, right? Anyways, so basically, right now we're looking at a situation where, housing starts going down, that triggers so many, catalysts in the rest of the economy. And another thing that I'm fearful of is basically construction companies have stopped building because the price of land has become so expensive. The price of labor has gone up. The price of materials have gone up. And they are saying, no way, I am not going to put my neck out there and, build a house for $500,000 that sells for $300,000, in 6 months. They're not going to do that. Right? Because then they go out of business and then everything goes, all whack. But think about all those labor employers that are right now sitting on the sidelines. They're ready to build a house and they can't. Why? Because the owner of the construction company is saying, no way, guys, we are not going to get ourselves into, financial risk as a result. Well, that is a lot of people that are now not working, right? And that kind of scares me a little bit. And here's another quote. Check this out. In terms of the current housing cycle, it may be at or close to the bottom in contract signings. This month's very modest decline reflects a recent retreat in mortgage rates. Inventories are growing for homes in the upper price range, but limited supply of lower price points is hindering transaction activity. Here's another quote. The inverse relationship between new home supply and prices broke down at the start of 2021 as a lack of existing homes pushed buyers into new home markets and sent prices soaring. But now existing home supply is rocketing too as homeowners scramble to sell before prices fall too far. This in turn will pressure home builders to cut new home prices. We expect sharp month-to-month declines in the new home prices for the foreseeable future. Okay, so foreseeable future, we're looking about 6 months. So look, if you are looking to buy a house and you're not ready to wait, you just want to buy a house right now and nobody's gonna stop you, here's my advice. At least wait till about January if you can. January, February, I think you're gonna save a lot of money. I'm talking $30, $40, $50, $60,000, right? Now, if you wait a little longer, if you want to wait for summer, now prices usually go up in the summer, but if you want to wait, I do think that, a year from today, right, prices will be a lot lower than they will be in January coming up. So again, this is moving. It's sort of moving fast. The recession's starting to move a little bit faster and faster. We need to keep our eye on the ball and make sure that, we position ourselves to really, be best handle the impact of how the recession might, affect our lives. So I'm going to go ahead and finish this video. This was a fun video to make. I want to just say a big thank you to everybody who's been watching my videos and supporting my channel, leaving comments and liking, pressing that like button. Thank you guys so much. It really does mean a lot to me. And if you're new to my channel and you enjoy what I have to say, if you're entertained, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys and I'll see you on the next video.